Hello everyone, this is the Shitcoin Detective, and today let's take a look at the big original cryptocurrency, Bitcoin, and what can we expect and what can we see on macro analysis. So I'm not going to go into technical analysis of the price. I'm going to do a macro analysis, and let's take a look at something that I'm calling a critical price, and let's see if we are close to that, because price of Bitcoin has been dropping. Now it's below $29,000, and let's take a look at what does it mean for miners. All right. So as we can see here, this is the network difficulty. So this is how much computational effort it takes to mine Bitcoin. And I have here a chart which is for the past 3 years. It's been steadily increasing. There was one big drop which was happening last year in July, and if we take a look at the price of Bitcoin, then we can see that it coincides that that price of when Bitcoin went from $63,000 back to $30,000. And what we can see here is that the basically the network difficulty drop down, and the only way that this can happen is if miners quit. So basically they give up, they shut down their operation, and they quit. And together we can see here the revenue of miners went. This is daily revenue of miners who are operating. Together back in June, we can see that the revenue dropped quite rapidly. 1/3 of the original revenue, and that meant that miners basically quit mining because it wasn't profitable for them anymore. But what we can see here is that the total hash rate has been steadily increasing in 2022. There are no drops, even though the price of Bitcoin since 2022 has been decreasing. So these trends seem to be diverging from the crash last year. So this is interesting to see why is this happening, and basically how much money are the miners making, right? This is the question that we should take a look at today, because here is what's happening. All right, let's say you have a mining operation, you mine Bitcoin. The only revenue that you are getting is in Bitcoin. So you get X Bitcoin, you have a warehouse, you fill it up with miners, you invest a lot of money into that, and then your income comes in Bitcoin because the network will reward you for newly mined blocks, and you get a little bit of the transaction fees that people are paying for transferring their Bitcoin. So and your expenses will be, people's salary, right? So this will be the maintenance, administration people, general service people who repair the miners and install new ones. And you will have a big chunk of it will be electricity cost. And all of that needs to go out in dollars. So basically, miners are constant sell pressure on Bitcoin, and the closer the price is to their operating cost, the larger chunk of the token they need to sell. So imagine if you mine Bitcoin and you have to pay half as much for the operating cost as the price of Bitcoin. What happens is that you only need to sell half of the Bitcoin that you are mining. But if it's closer to the operational cost, then suddenly you are have to sell the much larger chunk of the Bitcoin, or you have to get this investment from somewhere else. So you have to spend more larger amount of money, and you have to sell the Bitcoin to do so. And there can be a situation where the price of Bitcoin is so low that it doesn't cover your operational cost. In that case, you are better off buying Bitcoin, and that's what happens when people shut down their operations, and that's why the network difficulty basically dropped. The other possibility is, of course, that you have people who are so bullish on Bitcoin that they are going to invest extra dollars into companies like this, and in that case they don't have to sell the Bitcoin, but they can accumulate it, and they can buy the Bitcoin and mine the Bitcoin and build up a storage of it, because they have the dollars. They don't have to spend the dollars to pay the stuff. So looking at the network difficulty, it's been rising, which can mean two things. Either new miners are getting commissioned, or better miners are getting commissioned, because if you make new silicon which can mine faster, because of like your computer chip gets faster each year with the new processors that came out with more cores and everything, and they use the same amount of power. But we also see that the hash rate has been increasing. So the question is, how much does it cost them to mine Bitcoin? And for that, I went to this company called Galaxy Digital, which releases very detailed analysis on their costs and how much they basically have to spend to mine Bitcoin. And this is released data from February. So since February, we see a network difficulty increase. So let's say since February, the network difficulty was 27, now it's 30. So it's been a 10% increase in that. And according to this document, they basically say that the implied BTC price to hit break even. So this is when their operating cost equals to their profits. It's $25,000. So, and at the time they were writing, Bitcoin was $37,000. So they had a 32% margin. Now we are very close to this $25,000, or if you include the rising difficulty of 10%, then let's say $27,000. We are very close to that now in price. Yet, if we look at the network difficulty, and if we look at the hash rate of the network, there doesn't seem to be any sort of slowdown that happened last year. So we are back to the levels, we steadily increase, and if you look at the all-time high hash rate, it's been increasing steadily, and that's despite the fact that every time there was a crypto winter, the hash rate has been plummeting. Like here, back in 2018, the hash rate was 50 million and jumped back to something like 35 million. So it's a 30% decrease when the price of Bitcoin went from, the bear market 2018, 6,000, went back to 3,000. So after this bull run, there was a lot of time where the price of Bitcoin stayed low, and then the price plummeted. And we can see that on the hash rate. You can see that on the network difficulty. If you look at the all-time, 2018, end of 2018, the hash rate plummeted because miners quit. And if you look at just the price of Bitcoin, we are nowhere near that, right? There's been a massive sell-off of Bitcoin going from the top all-time high to 30,000. It's been going on since the entire year, 6 months, even longer, and the miners don't quit. What does this mean? It means that despite the price of Bitcoin, all these investors who are spending basically millions of dollars a day mining Bitcoin are bullish on the price. So even though by the looks of it right now we are in a massive bear market and this can last years, I don't think that's the case. I think price of Bitcoin can rapidly shoot up soon, and it can catch you totally unaware and unprepared. So I am going to transfer some fiat into the exchange and buy some extra crypto, because I think the macro analysis is telling me that that it doesn't seem to be stopping, right? It's increasing, the difficulty is increasing, the hash rate is increasing. I can't mine Bitcoin, but I can buy it. So let's do the same as the experts are doing. All right. This has been the Shitcoin Detective. I wish you safe trading and take care.